Perfect. Yeah, well, as you said, the RBA met on Tuesday this week, the first Tuesday of the month. At 2:30 p.m, they announced a 50 basis point rate hike. So that takes our central cash rates from 0.35 to 0.85%. Now, I was talking with my father about this earlier in the week, and we're both very frustrated how they're not sticking to nice whole numbers. We've gone from 0.35 to 0.85. Now, my own prediction was at a 0.4% rate hike. That'll take them to the
Three-quarters of a percent.
Exactly, a nice round 0.75%, but obviously they've gone against that, and we're at 0.85%. Now, one of the interesting things about this move is it's the largest rate hike in nominal terms since 2000. So we've only seen 0.25% rate hikes throughout the last 22 years, but this is the biggest one in that period of time. Now, of course, the reason for this is along the narrative we've been talking about, trying to rein down inflation. The central bank's main comment, and there wasn't really much to note, and that was the board is committed to doing what is necessary to ensure that inflation in Australia returns to target over time. So it's expected that inflation kind of peaks and settles around 6.5% by the end of the year. And to really bring that down, to keep it capped, we are expecting quite a few more 0.5% hikes to come. Now, moving ahead...
More 0.5% ones, not even 0.25%?
More 0.5% ones. I mean, you have to go quick and you have to go fast. We've seen, for example...
ECB is lagging behind quite a fair bit with regards to their inflation as well.
Exactly. We'll talk a bit about that in the next section, but you have seen all these central banks going harder and faster than originally expected. New Zealand, great example. I mean, they're well ahead of the rest of the Western world when it comes to rate hikes, going very hard and fast. And our Citi, they're expecting the cash rate to hit 1.85% by year end. So how those rate hikes come, it's yet to be seen, but that's still another 1% to the upside. And of course, I would say spare a thought for poor Jim Chalmers. He's the incoming treasurer for our new Labor government. And of course, he's been hit with a very challenging period that now he has to manage. And then finally, as you mentioned, I'll bring up a quick chart of the XKO. Now, that's the ASX 300, for those who don't know their indices. But of course, as we mentioned, quite a sharp drop-off over the last week. We hit that resistance level number 3, and we did consolidate it on for a little while. But now we've come back to level number 4, and we're consolidating on there. Now, if you look quite loosely at the last, say, 4, 5, 6 months, which is this trading year, we can see quite a clear head and shoulders pattern, as you can see there. Now, the downside target still remains. That level number 5 is of significant risk. There's a massive pullback from the middle of that triple top. And I do think if we are to break that, there's some very severe consequences ahead. Now, I'll liken that to the next chart with the S&P 500. And the reason, unfortunately, I see further downside is the red candlestick we saw overnight still has another 5% to go before we see its low of this year, which would mean a massive consequence for the US for the Australian market and breaking that key level of support. So further bleeding, further downside, but the story remains the same. Central banks going harder and faster than originally expected, and now our central cash rate is at 0.85%.